Welcome back to Finance News UK, the only show you need for all of the week's top stories in business, investing, and the stock market. If the high cost of living and the low value of your investment portfolio is getting you down, then this is the ideal place for you. Let's jump straight into the headlines. Buckle up because the markets have been giving out one hell of a beating this week. On Wall Street, the stock market has been bleeding multiple shades of red. The NASDAQ has entered a correction after having a terrible start to the new year. The technology-focused index, which tracks the largest companies in the space, has fallen by more than 10% since the highs seen back in November of 2021. The selling's been due to investor sentiment and fear of interest rate rises by the Fed in the US, and also fears of higher than normal inflation data. Multiple interest rate rises are likely to take place quicker than expected, previously as confirmed by Chairman Jerome Powell earlier this year. For wider market indices, the S&P 500 is also down 6% in the past month. Still a way to go from correction territory. Stay strong, my index holding brothers and sisters. It's really not as bad as it looks out there. Some of the biggest losers on the markets include companies who had seen huge run-ups since the downturns of 2020. Names like Zoom, Teladoc, and Palantir are all trading around 52-week lows as investors seek the safe haven of cash or value-based stocks producing real profits today. Basically, if the stock you're invested in is featured on popular YouTube finance channels or in Cathie Wood's ARK funds, you're deep in the red. At least for now, but then who knows when the selling will end. In other news, Netflix was hit badly on the markets this week after it announced significantly lower than expected subscription growth based on Wall Street expectations. The streaming giant, who produces popular shows like Squid Games and The Crown, saw its share price tank by over 25% in a single day after it added only 2.5 million subscribers against the expected 6 million new subs. The service had also announced recent price hikes to its service levels in a bid to create profits and stop losing large sums of money whilst it still grows around the world. Competition in the sector remains fierce, with services like Amazon Prime, Apple TV, and Disney Plus all entering the space to capitalize on the demand for streaming. In one of the biggest stories this week, software giant Microsoft has acquired the games publisher Activision in one of the biggest acquisitions in recent history. Cloud software mammoth acquired the Call of Duty game publishers in an all-cash deal worth nearly $70 billion this week, sealing its position as one of the dominant leaders in the gaming world. The acquisition adds on to other recent notable spending in this sector, as Microsoft also bought Bethesda, which was owned by parent company ZeniMax. Competitor and long-standing gaming brand Sony was quick to ensure that popular franchise of Call of Duty would be remaining on the PlayStation platform, as rumours circulated about the future of the franchise on the platform. Many Microsoft diehard fans wanted to see the games prioritised for the exclusive Game Pass subscription service, but Xbox CEO Phil Spencer confirmed in a tweet that he'd spoken with Sony leadership to confirm that they intend to honour current contracts and keep working with the brand. Watch this space, guys. Now tell me, are you more of a PlayStation person or an Xbox guy, or a PC nerd like me? Comment below. It's also been a really bad week for the cryptocurrency markets, with over $200 billion worth of market cap being wiped off the space. Selling pressure remains after the new digital asset class hit all-time highs back in November, but has since seen over $1 trillion worth of value removed after investors and speculators have all been scared off, following on from the currency action from the Fed. Although the prices in this market never make sense quite yet, to be honest. I'll have to hold on to my Bitcoin for some more years yet. To the moon. News close to home now. In one of the biggest stories this week, Unilever's £50 billion offer to purchase GlaxoSmithKline's consumer healthcare division has fallen flat on its face after it fell on deaf ears. Unilever boss Alan Jope confirmed that the offer would not be raised after it was rebuffed by GSK for apparently failing to value the side of the business. In response to all of this, the market reacted by pushing the price of GSK for a short while and selling off Unilever. Dame Emma Walmsley, chief executive of GSK, is pursuing a listing of the consumer business this summer as the company focuses on discovering and developing blockbuster drugs. GSK has come under pressure from different activist investors like Elliott Management and Bluebell Capital Partners. However, both investors have remained silent since details of Unilever's interest in the acquisition have emerged. High energy prices will likely last longer than expected, and that's from the governor of the Bank of England, Andrew Bailey, this week. Bailey told MPs this week that he does not expect the high prices of wholesale energy to reduce until late 2023. He also noted that the conflict in Ukraine with Russia is also one of great concern, with the region being a big supplier to the European continent and in turn the UK. Investors await interest rate rises in response to record high levels of inflation, which topped out at 5.4% for December against a target of just 2%. Looks like another month of expensive fuel at the pumps and down the supermarket aisles. It's time to break open the beans. Primark is looking to cut 400 jobs to reduce the complexity of their management structure. The high street retailer, famous for its low prices on fast fashion, who employs 29,000 people in the UK, is looking to get more boots on the ground for managers and get itself back to its selling numbers pre-pandemic. After failing to have any online presence, the fashion retailer was unable to sell products during the periods of lockdown in the UK, but is seeing sales increase back up to expected places. The FD, John Bason of Associated British Foods, the parent company of Primark, stated that they intend to keep prices low even after increased cost pressures from transport and staff costs. Whenever I think Primark, I just feel sorry for all the staff who have to refold all of the clothes which are constantly unfolded and left on the floor. Solidarity to you guys. In other headlines, Amazon has backed off banning Visa credit cards on its platform. The online retail giant had initially said that it would stop accepting payments from the card provider and told customers that after January the 19th this would no longer work. However, the company is now understood to be in talks with Visa to settle the dispute, which is around the transaction fees and interchange fees, which can be anything up to 2% for the courtesy of taking a payment. And finally, our good news story of the week. The Mirror reports that Britain's dirtiest cat, who was found in a bin lorry, has now been all cleaned up and given a new home. The cat, named Scruffy, was taken in by Newcastle's Cat and Dog Sanctuary after being spotted by a driver in a bin lorry. Here's the before and after pics. Now, if only you could smell through the screen. I mean, maybe you will one day in the metaverse when I do finance news there, but watch this space for now. Now onto some fails, because there's always plenty of stupid stuff going on in this sector, and we wouldn't have it any other way.
Just when you think it couldn't get any worse, fails of the week.
This week's biggest fail is from one of the darlings of the pandemic, Peloton. This company has seen a huge fall from grace after tempting consumers with its internet-connected exercise bikes and treadmills during periods of global lockdowns. The fitness subscription company lost nearly 25% of its share price in a single day this week after it announced it was temporarily stopping production of their hardware due to significantly less demand. The fitness bike maker, who was a huge winner in the 2020 stock rally, propelled its founder to billionaire status after the share price rallied multiple times. However, new sales estimates show that the firm will now have to cut their expected revenues by $1 billion as people return to gyms and start to run outside. The famous fitness bike, fitted with a large iPad-like screen, retails for over £2,000 and requires a subscription for £39 a month to work, which is an awful lot of money just to hang clothes on. I think I'll stick to a normal foldable drying rack, thanks. No new IPOs of note this week, guys. It would have been a pretty bad week, to be honest, for anyone trying to get on the public markets anyway. So let's head over to the fun section, where we review all of the funniest memes from Reddit's Wall Street bets. Welcome to the best of the bets. A timely reminder in this time of market crisis, ladies and gents, always inverse Kramer. That's a well-known rule, right? If you've been buying and holding all of your investments based on some due diligence of a YouTube finance creator without thinking for yourself and only buying companies who do not make a profit, then you'll probably end up like this trader as well. Be careful out there, guys. Sorry, Jim, you do make this very easy sometimes. Not sure how fundamentals can change so drastically from the start of the month to now, but hey, at least you stuck your head out. As Robinhood's share price falls, the rich are now being stolen from once again, but I'm not sure anyone's getting the handouts. Let's all hold a moment of silence for the founders who are no longer billionaires. They'll have to tighten their belts this year, I reckon. Maybe just the one Lambo? And finally, although it's not quite over yet, this Reddit user decided that Peloton is already heading to heaven to join its place among some of the greats in this picture. Does the system still work if you don't have Wi-Fi connection that high, or do you still need the subscription? It probably does, so just use it as a clothes horse and you can hang loads of clothes on it. To be honest, they fit a lot more than you expect. They're pretty big. Anyway, thanks so much for watching. Please drop me a like if you have, subscribe for more, and we'll be back with all of the news the same time next week. In the meantime, for what's left at least, happy investing.